This is Daybreak Asia. We're counting down to Asia's major market opens. And Haidi, it's really all that big countdown from investors to those NVIDIA numbers that are due out later and really whether that sky-high bar, can they jump over it?
Yeah, and what happens to the rest of the market, right? We sort of see a bit more breath being created across broader parts of this market, maybe a rotation more into value if you take a look at some of the numbers. But certainly central banks are not far from the fore either. We have the RBNZ decision, and expectations are for policy settings to be unchanged, but certainly watching for any nuances or communication about how close we are potentially to easing too.
Yeah, and not just, of course, the RBNZ. We've been hearing from Fed officials over the past hour or so. The Boston Fed President, Susan Collins, the Cleveland Fed President, Loretta Mester, also heard from Bostic, the Atlanta Fed President, all really just reinforcing this need to keep rates higher for longer. And that, yes, there is perhaps some progress on inflation, but it's really too early to declare any sort of victory just yet. What we're tracking this morning as we come online with Japan is also some eco data to note here, because we actually just had the trade figures coming out in the last 10 minutes or so. Broadly, we saw a bit of weakness creeping through, or lower than estimates here, because exports were up 8.3% on the year. The estimate had been for 11%, and as well we saw that trade deficit widening in the latest reading. That's the state of play for Japan. Of course, tracking the Japanese yen there, holding, again, fairly steady this morning, but still at historically very weak levels, of course, and a big focus, again, on the Japanese 10-year yield, because we're continuing to monitor when will it hit that 1% mark, and we're just continuing to track those yields inching ever higher. Japanese equities, we're just slightly under pressure so far in the session, so not really following that optimism that came through on Wall Street overnight so far. Let's change on, because Korea just coming online, of course, and here eco data to note, because we actually had April PPI coming out earlier today, and we saw it rising actually 1.8% on the year. 0.3% on the month as well, but importantly, it was actually a pickup in PPI, again, producer price inflation, and so certainly perhaps presents a bit of a headache for the BOK. That meeting is also coming up. What else we're watching today for Korea, of this course, that optimism, as we said, around AI. Actually, we've got South Korea hosting an AI global forum, but NVIDIA numbers in particular, as you said, the real focus for markets today, and NVIDIA are one of the key suppliers to that of HBM chips. As Samsung, we know, of course, in a very heavy weighting on the cost behind it.
Yeah, but I'll take a look at just the first couple of minutes as we creep online here in Sydney. A little bit upside, pretty flat at the moment, but certainly the futures picture was pointing to some gains across the rest of the region. We did see some mild declines at the close yesterday. A lot of mining and healthcare shares were kind of the biggest laggards there, but watching for some of those miners, watching Rio Tinto over one after the force majeure being declared on the alumina cargoes, of course, caused that big spike in the price of aluminium to a 23-month high there. So that's one area to be watching. The Aussie dollar is holding pretty steady at the moment, watching to see kind of if we get any advantage through from the RBNZ decision, depending on the messaging on sort of how dovish that's perceived to be. Watching treasuries, of course, as well. We did hear from the Fed Reserve Governor Chris Waller, just one of the speakers that we've had over the past 24 hours or so, saying the continued softening of the data over the next 3 to 5 months would allow the Fed to consider lowering borrowing costs at the end of 2024. But this takeaway really is this idea of kind of several good months of data needed. Take a listen.
In the absence of significant weakening in the labor market, I need to see several more months of good inflation data before I would be comfortable supporting and easing in the stance of monetary policy.
Well, more on today's market action and reaction to that. Garford Reynolds, who leads Markets Live Asia coverage, and I like this part, said if I was still a professor, I had to assign a grade to this inflation report, it would be a C+. Far from failing, but not stellar either. So really the managing of expectations. If you're wondering, is it going to be the next print or the one after that? Well, it might be several from here.
Yeah, I mean, a lot would depend on the actual internals, and also, Waller made it clear that a big part of the equation here is what's going on with the labour market. And we actually had Mester and Collins out just now. They're in a round table sort of discussion, making the same sort of point. They're happy with where policy is now, so they see no reason to move rapidly from here. And they're also talking about inflation. We need to see more. And again, the job market is in a good place, so there's no rush. Very clear, they're only going to rush towards interest rate cuts if they see not just inflation staying soft, but also the jobs markets are starting to show some real strain. And that makes a lot of sense. They've already been caught out at least a couple of times this cycle by being confident that inflation would not get out of control and then being confident that it would keep on coming down. So they really want, as Waller was saying, they want several A papers on the inflation front before they're willing to allow us to move to the next level and go to the rate cut regime instead of the holding rates regime.
Some tiger parenting there from
Yes,
from
exactly.
Fed governors and possibly from the RBNZ governor too, right? Like,
Well,
kind of trending, expectations are trending in the right direction, but still above what they'd like to see.
Yeah, and Orr has been, one of the more hawkish, if not the most hawkish, central bank head out there. He took rates higher than just about anybody else, and he's shown a willingness to hold them there longer, even if that means a recession. And yes, the labour market there is showing signs of slack, and inflation is coming down, but it's still not where he'd want it to be as yet, and that's why everyone thinks that the RBNZ will stay on hold. The big question is, do they make a serious shift towards putting rate cuts on the table? We have the contrast with the RBA, especially with the minutes that came out yesterday, showing that they went back to thinking about whether or not a rate hike might be needed before deciding the best thing to do was stand pat. So far, the RBNZ has said, rate hikes are definitely no longer needed, but they're a long way from saying we think rate cuts will soon be needed. So any steps they take towards that will be watched for very closely. If they do take some strong steps towards that, then you could see the Kiwi fall, especially with those Fed and Aussie central bank comments as a backdrop.
And Garfield, of course, what else investors are going to be watching very closely for the NVIDIA numbers coming out and whether that can drive further momentum and what it signals around AI spending in particular. But already we're hearing commentary. Perhaps we had earnings out from Palo Alto Networks and that was perhaps foreshadowing what could be some negativity for the company.
Yeah, Annabelle, it's a difficult day for equity investors because this time, last earnings cycle, everybody was worried that NVIDIA couldn't possibly beat expectations, and it totally blew everybody away, both with what it actually reported and, more importantly, with what it said it saw going forward. The stakes are perhaps even higher now. We've had several, you mentioned Palo Alto, there have been others, even TSMC a while back, who, in the chip space, who've reported, yes, things are good, but they're a little bit less certain about the future, about the outlook. And that's the key concern, because the AI boom has driven a lot of valuations extremely high based on the expectation that earnings will catch up, as it were, with the share prices at some stage. So any sign that we might start to get even just a maintenance of the current earnings momentum for NVIDIA rather than continued acceleration, that would cause a lot of damage both to NVIDIA itself, but also to the tech space and more broadly, the S&P 500. We had Tatjana Dari on MLive USA pointing out that we've gone a very long time without a 2% daily decline in the S&P 500. And I think one of the things that's underpinned that is this very strong expectation that the AI boom is a game changer. So if that game, if the end game for the initial burst in AI starts to come into view, that's going to cause a significant lessening in that optimism that the only way, sustainable way for shares is up.
Yeah, it's that high bar that just keeps getting ever higher for NVIDIA and the market in turn. Well, that was Garfield Reynolds, who leads our Markets Live Asia coverage. And as Garfield was talking about, the Fed's Waller wanting more good CPI months before they start to have any sort of policy shift. That's actually the top of the Daybreak terminal today, or Daybreak, today's edition of Daybreak. You can reach that on the terminal, as I said, also available on mobile in the Bloomberg Anywhere app. We'll have more ahead. This is Bloomberg.
Lots of potential headwinds building over the coming months and the next year for global trade, not least of which, of course, is threat of China tariffs and potential retaliation. In the meantime, though, container spot rates for cargo departing China surging over 9% last week. This is the highest level since the pandemic boom. Bloomberg Intelligence expecting geopolitical tensions could keep those prices elevated. Let's discuss the outlook for the industry with one of the largest shipping companies in Japan. Joining us from Tokyo is Takeshi Hashimoto, who's the president and CEO at Mitsui O.S.K. Lines. Takeshi, really great to have you with us, and we really appreciate your time. So we are seeing potential pricing looking more favourable as a result of some of these geopolitical tensions. Do you think broadly on balance, is that more of an upside, or are you more concerned about the impact on trade volumes?
Yeah, yes, there are various factors since the Palestinian the problem happened, that the Suez Canal we could not use. Therefore, that generally the demand and supply balance is relatively tight. In addition to that, recently that we observed that the total cargo volume from Asian markets to both North America and Europe steadily increasing, and it creates the bit tight the market situation. Perhaps that this trend will continue for the time being.
How much concern are you really feeling at the moment when it comes to the impact of US tariffs on Chinese goods, potential retaliation, any kind of volatility and impact on global trade following the November US election?
Mm-hmm. Yeah, that a little bit too early to say, but certainly that this can be the quite big the potential factor for us. But look at the market as of today. That the total volume of the cargo flow from Asian markets to North America is actually increasing, not decreasing. And perhaps one of the reasons is that the relocation of the export terminal from the China to other Asian countries, including India, so that the rapidly increasing, so that the total volume of the Asian U.S. trade is quite steadily recovering in line with the U.S. economic recovery. That is our observation as of today.
So perhaps a little bit of wait and see on that one. But where you are directly being impacted is from the sanctions on Russia due to its war in Ukraine. And we know that you own 3 LNG vessels that you had actually planned to charter to the Arctic LNG 2 project in Russia. Can you give us an update on what you're doing with those vessels?
Yeah, first of all, that the existing LNG projects like Sakhalin or Yamal is still not the target of sanction. So therefore, that we are continuing our service to provide that LNG transportation from Russia to the both European and Asian markets. But as you correctly mentioned, that the new project Arctic 2 is at the target of the sanction, and so that we recognize that we cannot provide a service to Arctic 2, and nowadays that we are studying how to transfer our business to to somebody who can continue the business with architect. But it seems to me that very complicated the political process, and we are carefully analyzing the detail of the sanction regime. Of course, as one of the shipping company in Japan, that we should follow the sanction regime decided by U.S. and the G7 countries.
So who would you be looking to sell to, and also what sort of timeline are you looking at as well?
So the situation is not so simple, because it is very difficult to sell our asset to, for example, the Russian companies. That it is also that create the potential that sanction target. Therefore, we have to be very careful that how to protect our own interest and without violating the sanction regime.
How much extra money is Mitsui making as a result of the sanctions?
So that it's very difficult to say. But if you look at the positive side and negative side of the sanction regime, that perhaps that in total that we can gain quite a lot additional income from the sanction regime, because it created that completely new the transportation requirements for the global market. For example, that there are so many goods before sanction, that so many the volume of cargos are coming from Russia to Asian market. But nowadays, instead the alternative route, the very long way from the northern Europe to the Asia, via through the south. The South African route, so created the quite big volume of the additional transportation requirements. So such kind of the things that created the additional the business opportunities for us. But at the same time, that we dramatically reduce our volume of the direct trade with Russian market, especially the Russian Far East. Therefore, if you analyze the pros and cons of the sanction regime, to me it's very difficult to say that, but perhaps that not quite the serious the negative impact financially, at least.
Takashi, very briefly, because we don't have much time, but we know that the Tokyo Stock Exchange is putting a lot of pressure on Japanese companies to improve their capital efficiency. How are you looking to improve your price-to-book ratio?
Yeah, that's true. But the shipping industry is a bit the exceptional one. That we are very the shipping market is a very volatile and quite cyclical industry. So therefore, I really want to rebalance our business portfolio and to achieve the more stable return and stable growth for the company. Therefore, to do so, gradually diversify our business and to materialize the quite stable growth for coming 5 to 10 years time, and it will create the additional value for our shareholders. I strongly believe.
That was Takeshi Hashimoto, their president and CEO at Mitsui OSK Lines. And you can watch us live and see our past interviews on our interactive TV function, TV Go. Then you can also dive into any of the securities or Bloomberg functions we talk about. Plus, become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go.
Well, supporters of Taiwan's new president, Lai Ching-te, are protesting an attempt by the China-leaning opposition to curtail his powers. Lawmakers have begun the final steps toward passing this controversial bill. Bloomberg's Taipei Bureau Chief Samson Ellis joins us for more. And, you know, some of the scenes out of Parliament are just extraordinary. It's never a dull moment when it comes to Taiwan politics, Sam.
No, obviously not. And what we saw last night were the largest public protests in years in Taiwan, as these protesters, as you say, trying to stop lawmakers from passing this new bill. And the reason they're so against this new bill is that it really is a quite remarkable expansion of the legislature's powers. The bill would give lawmakers the ability to call the president in front of them whenever they request. The president would also have to present an annual State of the Nation address, similar to the United States. It would also expand lawmakers' abilities to investigate the government. It would expand their powers to request documents from the government. It would also implement fines for any government officials who are speaking to the legislature and are found to have told untruths to lawmakers that could result potentially in prison sentences of up to 1 year. So on the executive branch, this has really been seen as a huge power grab by the legislature, and an attempt really by the legislature, which is controlled by the more China-friendly Kuomintang here, as an attempt to really curtail new President Lai Ching-te just shortly after he took power on Monday.
So how much power do the people really have here, Sam? If they're against this proposed legislation, can they really block it through protests?
Well, that's what we're going to see over the coming days. So last night, the legislation passed its second reading. It now goes into its third reading, after which it will become law on Friday. So I think what we're going to see is we're going to see a repeat of these protests Friday evening, potentially even bigger. We saw about 10,000 people out on the streets last night, according to our own estimations and local media. And so that should repeat itself on Friday when this bill comes to, passing its final hurdle before becoming law. And this really does harken back to 10 years ago in Taiwan, when the government at the time tried to pass a trade deal with China, and people took to the streets in huge numbers to protest against this bill, and actually managed to storm the legislature and occupy it for several weeks, and eventually forcing the government to shelve the bill. So that was 10 years ago. That was called the Sunflower Movement, and that was a rather pivotal moment in recent Taiwanese history, and really is an example for these protesters. And so you go out there and you spend time with the protesters on the streets. They do refer back to that, and they are saying, some people are going to try to get into the legislature, try and stop this bill if at all possible.
Taipei Bureau Chief Samson Ellis there. Let's get you to futures opening up in Europe, and we are seeing this is a picture when it comes to Stoxx 50 futures as well as German DAX futures. Pretty positive there. We did really see that decline in European stocks in the previous session. The focus, of course, firmly on NVIDIA still. Also fresh clues from the Fed as well. We saw an all-time peak though for the Stoxx 600 index. Also, when it comes to German stocks, we could see a little bit of upside with an improved profit backdrop is expected by most analysts there. Also watching the euro, pretty steady and in fact lacking a bit of momentum to reach that higher range.
there is a gap arising between the demand for natural gas and the supply that's available. I think there are other factors that are going to cause that potential gap to widen even further. Things like electrification, as heavy industry moves to reduce emissions and moves to lower carbon intensity sources of power. When we think about things, the natural field decline that we're facing is going to put pressure on the supply side. Demand, as I said, is going to continue to grow. So the pressure is going to be more and more acute as we move out in time.
With that, Energy CEO Meg O'Neill there. Take a look at some of the broader commodities that we're tracking. Aluminium is actually really one of the shining aspects of this rally that we've seen across broader metals and commodities. We saw Rio Tinto issuing their force majeure when it comes to the shipment of alumina from one of their Queensland shipments, and that really saw that big spike when it comes to aluminium prices to that 23-month high. We're seeing a little bit of a pullback there when it comes to primary aluminium traded in London, looking pretty flat at the moment. Copper futures continues to push through with this rally. We are seeing gains of about 0.3% there. It has been kind of a steadying mood, though, when it comes to copper and this record rise. We have seen participants in physical trades of copper now warning of overshooting risks as well, particularly as we see kind of a few concrete signs of a property turnaround in China, despite some of these incremental and more significant measures that have been announced. Rio Tinto, as I mentioned, up by about 1.3%. They're also watching Fortescue Metals. We have related to, of course, a China turnaround story, seeing that big jump when it comes to iron ore. Futures now extending that rebound higher since about early March, and we are seeing some of those pure play metals, iron ore names reacting as well. Taking a look at the broader markets in terms of what's trading in Japan and across in South Korea and here in Australia as well. A little bit of struggle for direction, really. We're seeing the Nikkei off a little bit, the Kospi also on the back foot. Here in Australia, bouncing back from yesterday's losses, and Bell, of course, we are watching, amongst other things, the RBNZ. Kiwi stocks looking pretty perky ahead of a meeting that is expected to stick to the current policy settings.
Yeah, and very much the countdown, of course, to NVIDIA's numbers, because we're going to be getting its much anticipated quarterly results later Wednesday, and that's going to give investors fresh insights into an AI spending boom fueled by the world's largest tech companies. Let's get more analysis with Maribel Lopez, founder and principal analyst at Lopez Research. And Maribel, of course, it comes down to NVIDIA's AI chips and the sort of demand for those, whether they can meet the demand. But what are you expecting when the expectations are already so sky high as well?
I expect them to come in at expectations, possibly even beat the general expectation. The demand for AI is just super hot. They can sell anything they have that's going to come off the line for at least another year. So we expect them to just continue to have blowout quarters. Having said that, I do think that the market can be a bit unrealistic in terms of the growth pattern that we have. NVIDIA is actually an extremely strong company, the bellwether of AI, obviously doing grand. But having said that, the market keeps pressuring them to continually overperform. And so we expect them to sell everything they have. And then the only question is how fast they can get those Blackwell chips out so that they can actually meet the next wave of demand that we're hearing from hyperscalers that really do want to move into the next generation platform.
Yeah, and I think we saw that earlier today because we had the cybersecurity company Palo Alto reporting as well, and they actually met estimates. But after hours, their stock dropped to nearly 10% at some points in the session. So perhaps foreshadowing what could be to come for NVIDIA if it does indeed just come in line. But what do you think they're going to be able to say to really impress investors? Do you think it, for instance, relates perhaps to the new Blackwell chip?
It's a long game and a short game. So one of the things we really like about the NVIDIA strategy is the fact that it's not just a hardware-only play. They're actually going to be building a software revenue stream around it. They're also very vertically integrated. When you look at healthcare, when you look at manufacturing, they have the ability to not just apply AI as it is in chips, but to really think about the industry perspective around AI, which means that they can be part of the development cycle for a very long time. So really the issue is, one, timing of the Blackwell chip, but also two, timing of when they start charging additional money for software revenue and this NIM, this NVIDIA inferencing that they were talking about, having an additional software revenue stream. I think that's an extremely smart move for the company to diversify themselves to being both both hardware and software. They're obviously software already, but having very specific enterprise software to create what they have been calling the AI factory, I think is the wave that we're going to be looking at over the next coming years. Having said that, people are really excited about hardware. That's the big number. That's the number that drives lots of billions in an organization. So really the timing of when this happens, people are just constantly expecting them to outperform, so there's a ton of pressure on them. Having said that, they're the game in town to beat with AI, and everybody wants what they have.
A lot of the loftier projections for growth will come down to the ability to secure supply, right? Is there any concern or uncertainty on that side, particularly when it comes to Taiwan Semi?
I think we always have a concern when it comes to supply, because we've had such a tremendous fast ramp up in demand, probably the fastest ramp up in demand we've ever seen for any type of technology anywhere in the world. So given that, there's obviously concerns. One of the good things about concerns, so you have to balance the good with the bad. So the bad is there might be supply chain constraints. The optimistic side of that is when there are supply chain constraints, you have very high margins and the ability to charge a premium for the product. So it's a nice balancing effect for NVIDIA, and there really isn't a lot of downside. I think for NVIDIA, this is all about managing the expectation of how much growth there could be, because the market does expect them to constantly overperform, and it's just a matter of at what level of overperformance. So they have to really be careful about how they guide for the next several quarters, because that's the unknown of will hyperscalers actually hold back orders or other things.
In terms of scale, we heard, of course, more details from NVIDIA, the CEO, about their tie-up with Dell to talk, about these so-called AI factories, right? How much does that, I guess, create scale and, in a way, simplify the, incredibly complex infrastructure that's required? Do you think that's a game changer?
So one of the nice things about being in the gold rush era is if you sell picks and shovels, you can sell picks and shovels to a lot of people. So if you look at the announcements that they've made in the past several months, they can sell picks and shovels with Microsoft. They can sell it with Dell. They've got a wide range of companies that they can go to market with, all up and down a high and low level of the AI stack. So they're actually fairly well positioned. Now, of course, there are other companies that are coming on with different aspects of it. We've seen some interesting announcements this week with Microsoft and Qualcomm, for example, or Qualcomm and Dell on more of the AI PC front. But when you look up through the data center, we see NVIDIA being very well positioned for that. So they have the opportunity to go to market with a lot of companies, and that can only be good for them.
I mean, the sort of superlatives when you take a look at the stock price, whichever way you cut it, is extraordinary, right? More than 90% higher this year. And I do wonder, there's now questions and bets being taken as to when it becomes simply the largest company in the United States. Does this idea of value kind of compute with you? And at what point, given that we do see evidence that a lot of the big scale institutional investors are taking money off the table more broadly when it comes to AI, is more going to be needed in terms of the evidence of this maturing industry for investors to feel this good about one particular stock, even if it is NVIDIA?
Even if it is NVIDIA, the thing that one is looking for in this market right now is rapid innovation. As long as they can continue to prove that they are rapidly innovating, they have the opportunity to continue market momentum. This is the largest technology transition that we have seen since the internet, and it has extreme legs in terms of growth over the next 6 to 10 years. So in the 6 to 10 year horizon, they have tremendous opportunity for both the market they're currently in, but to also create next generation markets. For example, we've not even seen the robotics market really take off, and they are actually quite far ahead in the robotics market. So you have to look at the several iterations of markets that they could go for. There's a general business market in the hyperscalers that we're looking at today. We continue to see more happening in healthcare and also in drug discovery. We continue to see more happening in the manufacturing era and in robotics. So if they play their cards right, for the long term, they should be able to maintain the valuation and actually have some legs behind it. The devil is in the details, but they're clearly looking at a forward visioning, much more so than a lot of the other organizations in that area. So we are very optimistic that they have a strategy that will be good for the long term. there are obviously concerns. It is an extremely high-value company. But if you're asking if the fundamentals of AI are there, the fundamental of the AI wave is in fact there. It is their job to execute on making sure they have the right technology at the right time to capitalize on that.
That was Maribel Lopez, founder and principal analyst at Lopez Research. And of course, all of that investor interest and attention on NVIDIA's numbers that are due out in later Wednesday. But we will have a T-Live blog. It's not underway just yet, but it kicks off around that earnings release. So stay tuned to T-Live Go to get commentary and analysis from Bloomberg's expert editors. But let's stay in the chip space. And Bloomberg's learned that ASML and TSMC have ways to disable the world's top semiconductor making machines in an emergency scenario such as China invading Taiwan. Let's get more on this scoop from China economy editor James Mager in Beijing. And James, this is a really fascinating exclusive report from Bloomberg here. Can you tell us exactly how that idea of remote shutoff works? And is that something that we knew about before that could be possible with these companies?
I think there's two things to think about. One, there's a capability that we reported on yesterday, which the chairman of TSMC kind of hinted at in September last year when he spoke about it, that they could render their factories inoperable. And what this seems to be, what we're reporting on, is that ASML has a kill switch of some kind, which allows them to disable the extreme ultraviolet machines that are used in TSMC's chip fabs in Taiwan. I think the other thing to think about, though, is that even without such a capability, the supply chains that go into making these machines work, the supply chains that go into making chip fab work, are so complex and touch so many different countries that in the event of a Chinese invasion of Taiwan, which is basically what we're talking about here, if China invades Taiwan, all of the supplies that go into making chips, the silicon wafers, the photoresist chemicals, all the machines from Japanese and South Korean and American companies and Dutch companies, all of those stop. There isn't going to be a Japanese company like Tokyo Electron, American company like Lam or Applied Materials. They're not going to be continuing to export the machines that TSMC needs. They're not going to be continuing to send the engineers that are needed to maintain those machines. So even without such a kill switch in these EUV machines, the ability of the successor to TSMC that would take over those factories in the very unlikely event of a Chinese invasion of Taiwan, wouldn't be able to continue to use them as they are currently used now.
I suppose the question is, does it make a huge impact when it comes to China's ambitions, right? There's some suggestions that some of the restrictions that we've seen have perhaps come a little bit too late in terms of curtailing the development that we have seen out of Beijing.
That's possibly true. I mean, you've seen the chips, the SMIC chips that are in the newest Huawei phones are at about 7 nanometers. There's been a lot of questions raised about whether SMIC is able to get the sort of the yield that you might want on those, whether they have enough, whether they're making enough of those and their accuracy is good enough to really sort of make that a commercially viable technology and to make money on those things. But China does seem to be improving in their ability to make higher end chips, and they're throwing so much money at it that eventually you would have to assume that they will be successful. I mean, they're trying to recreate a technology that already exists. The Dutch were able to master this technology in the 80s and early 90s. And so China is basically looking at a goal that already exists and saying, we're going to throw as much money at this as possible as we have until we're successful. So in the end, you would have to assume that sort of brute force operation is going to be successful. How long it takes and how much money it costs, I guess those are the two questions. But I mean, at least for the moment, the technology that ASML has that they sell to TSMC is not available to China, and that is holding back their technological progress, or at least for semiconductors.
Bloomberg China economy editor James Mager there in Beijing. More to come here on Daybreak Asia. This is Bloomberg. Singapore's Transport Ministry is investigating after one person was killed and dozens of others injured when a Singapore Airlines flight from the UK hit severe turbulence. Bloomberg's Avril Hong is tracking the latest developments for us. So some of the images, the video are really quite confronting. What do we know?
Yeah, this was really quite a surprising incident and traumatic, I think, for those involved. We hear how Singapore transport authorities are in contact with their Thai counterparts, and they will be sending investigators to Bangkok, which is where the plane made an emergency landing. The civil aviation authorities in Thailand are doing the same. And we also hear how Singapore Airlines has already said that it is working with authorities. Now, there were about 230 people on board when the incident occurred, and they came from various nationalities, including the UK, Australia, India, Singapore. This was supposed to be a routine flight, 13-hour journey from London Heathrow to Singapore's Changi Airport, but when it was over Myanmar was when it hit severe turbulence, and passengers describe being in their seats one moment and then hitting the overhead compartments the next. So as you say, it was really quite startling for them.
And do we have any sense or understanding yet of what caused that turbulence or the type of turbulence it could have been in as well? Are we likely to see, with climate change impacts, these sorts of events continue?
Yeah, we don't yet know for sure what sort of turbulence this was, but in general, this tends to be caused by rising pockets of hot air or from gusts and storms and the clouds that come with it. But if you go even higher in terms of altitude, you could see what's known as clear air turbulence. These are practically impossible for pilots to see, which makes them particularly insidious. And this is, of course, caused by, the differences in speed of two air masses. So, it begs the question how climate change might impact this. While it is really difficult to pinpoint climate change to these specific flights, just because the data is not there, it's highly dependent on pilots' records. We have studies already talking about how these climate change in the past decade, since 1979, according to one study, has prompted about 50+ % increase in severe air turbulence in the North Atlantic area. Other studies project that this could double or triple into the decades ahead, guys.
Thanks, Avril Hong, for those insights there. And be sure to tune in to Bloomberg Radio as well to hear more from the day's big newsmakers and get in-depth analysis from the Daybreak team. Broadcasting live right now from our studio in Hong Kong. You can listen via the app, Radio Plus, or BloombergRadio.com. We have more ahead. This is Bloomberg. Chinese e-commerce company Pinduoduo is reporting first quarter results later today. Bloomberg Intelligence sees revenue doubling over the period, possibly even beating its rival, Alibaba. Senior Asia-Pacific consumer analyst Catherine Lim joins us for a preview. And I think, Catherine, perhaps some people outside of this region might not be so familiar with PDD, but they do certainly know Temu. Do you think that given the huge success of that online shopping platform, we can expect another strong quarter from PDD?
Right, indeed, Annabelle. It is Temu that is actually driving PDD's revenue and profit growth. So we are expecting a doubling of their revenue growth. And taking a step back, we've actually only seen the single digits kind of gains coming through from Alibaba and JD.com. So it's again going to be a great set of quarter and showing from PDD tonight.
Are you concerned about margin pressure? We've seen that really as a trend over the last 5 quarters.
Right, that's a good question. Clearly, the company is now venturing overseas, and the overseas business is the one driving the growth. The business model of which, it is costlier because of some of the consignment models that they've actually undertaken to actually bridge Chinese suppliers with customers overseas. So that's going to hurt their margins from the high, but I do think that, we can actually get that compensating factor from the very high revenue growth that we are seeing. So we should still be seeing profits growing in the double digits.
And how do you think PDD is likely to reward investors here? Are we likely to see a share buyback or dividends, for instance?
You know what? PDD is now one of the few remaining Chinese tech companies that have yet to actually have a share buyback program nor declare dividends. Now, I will be a little surprised if they actually go in that direction, given that, they are looking to invest more into some of the logistics network overseas as well as in China. So there is needs and users for their funds. But let's see how, the company look at shareholders' returns going forward.
Bloomberg Intelligence Senior Analyst for Asia Pacific Consumer, Catherine Lim there for us. Take a look at how we're setting up when it comes to US futures at this point. Of course, there's only one stock that's firmly in focus for investors at the moment. And of course, it is expectations of another impressive lot of numbers from NVIDIA. This is the picture as we see US futures pretty flat at the moment. Taiwan futures up by just about 0.25%. Broadly, we're seeing really a kind of a struggle for momentum and direction at this point after the US session really hit another fresh record high, the 24th record this year for the S&P 500, with all eyes, of course, now on NVIDIA. This is, of course, at the heart of the AI boom. The results will be out on Wednesday. Here in the region, we're watching for the RBNZ as well with its rate decision out today. We're not expecting a change in policy settings, but certainly some of the communication around what Governor Orr might be thinking about the balance of risks and when the timing of easing might begin as well. He's been typically very much on the hawkish side, Bill.
Yeah, Heidi, and that decision actually just over 1 hour time away. What else we're tracking, of course, it relates to what's happening in the crypto space. And take a look at that big run-up we've seen there in Ether over the last 3 sessions alone, more than 20% at this point. But it is these rising expectations and really changed expectations, because we're now actually perhaps thinking the US SEC could look to approve spot Ether ETF applications. We previously thought that wouldn't be the case, but the odds are now rising. And so off the back, of course, you've got that subsequent run-up in the token there. This is Bloomberg.